Thanks so much for doing this.
No problem, man. It's gonna be exciting. I think we got some good questions teed up.
Yeah, yeah. So I've been following you for a long time, and you definitely have a good sense on the markets. I was wondering why you think people should have exposure to real estate over perhaps like index funds, startups, and crypto.
Yeah, so I think that those are great investments, right? It's different for everybody. Depends on your net worth, but I think anybody over $1 million with of net worth should always have a little bit of real estate exposure because I think it's a hedge against a lot of different things. What I love about real estate is that it's not very liquid and you can hold it for a really long time. Stocks, crypto, you push one button, you're out. Which, when things get emotional or scary or the price goes up, it's easy to sell. I had a bunch of Amazon stock that I sold at $1,500. Really wish I had that still. With real estate, it takes 3 6 months to sell, and it's expensive. So I kind of love the long term illiquid nature. And then there's giant tax benefits, right? If you buy and sell stocks all day, you're going to be in the 35% tax bracket or higher. Real estate investors, there's just so many different tax advantages to doing it that you can make really good money in a very tax efficient way and keep most of it.
Yeah, that makes a lot of sense. And what sort of proportion of your portfolio is real estate today?
My net worth is probably 30% cash, 70% real estate, and I guess I don't know, 10% of that cash is in equities right now. But yeah, I think everybody should have some exposure. It all depends on I'm in the business, so I'm doubling down on what I do. I'm either gonna make it big or lose everything here. We'll see, but I'm betting pretty big that my little self storage play is going to work out well.
Looks like it's going well so far. Thanks a lot for having me.
No problem. Appreciate it. So Greg says you talk about investing in self storage with a purchase price above $500,000, even if you have to raise capital. Why is that? So I guess you're asking me why I think such a high minimum purchase price.
Yeah, I've seen you tweet about this maybe more than once in the last few weeks. And myself, I've been interested in self storage for a few years, just haven't gone into it, i.e., creating a syndication or on my own for various reasons. But for my personal situation and the other holdings I have, was looking in that 500, 4 to 500 range. Mm-hmm. $30 to $40,000 NOI makes it comfortable for a single person to do it. Just curious if there's specific reasons to not venture to those levels, or obviously it's more of just a particular situation. Everybody's situation is different.
Yeah, stay on because I might ask you a follow-up question. But in general, a facility that's cheaper than $500,000, it can be tough to cash flow because things like your software, your utilities, your lawn care, these little expenses can really take big chunks out of net operating income. The things you can't get around. The fact that you have to pay an accountant $500 to file your return or $200 a month to do bookkeeping. These little things add up, right? A pest control contract for $150, if you make 30 grand a month in revenue, is not that big a deal. But if you have a small facility and a $500,000 facility is probably doing $4,000 to $7,000 a month in revenue, every little expense can really take a chunk out of that. So, how much cash do you have? What would be the cash that you have available to make a down payment and then to keep in reserve?
My wife and I differ on this, and I know you and some of the other folks online talk about the spouse being a big X factor in a lot of these discussions. I'd be comfortable going more than that. I think obviously with the SBA loan, from what I've seen, 10% is the requirement there. With a little working capital and the debt coverage ratios. A lot of what I've looked at for the things you just described and the lower price points don't hit the coverage ratios well enough, right, to make it worth the time and effort. But there's a few here or there that kind of, make you want to learn a little bit more. And so, obviously time is valuable and don't want to necessarily focus my time on those. If, yourself and others out there are in alignment that it's not a waste of time, but time is better suited looking for something a little more, even if that means, going to raise some money from family and friends and then take the loan on top of that.
Yeah, my first deal was crazy, right? We did a $2.4 million brand new development as 24-year-olds having no idea what the hell we were doing. We had 500,000 of our own cash. We put 250K of it in the deal. We raised $500,000, and we took a giant risk. I feel a lot differently about risk right now. My opinion is that I'm trying not to lose what I've built now. I've got some good things going for me, so I don't like highly leveraged SBA loans because I don't agree with being able to lever up real estate 90%. Now, on the other hand, some people have had great success with SBA loans, even in the self-storage business. I'll say that sellers don't like them because they take longer to close. There's more fees. It's more rigid. I prefer working with a local bank and putting 25 or 30% down. But our best deal ever from a cash flow perspective was our deal in Pittsburgh, Pennsylvania. We purchased it for $472,000, and it was doing $6,000 a month when we bought it. But they were way under market rent, and we raised the rent on day one, and we raised it again, and nobody moved out. And this year, last quarter of this year, we did $9,000 a month, and our cash on cash yield on that quarter was 35+%. So that's a life-changing deal for one person, one family. Right. If you can find a deal like that, it's all about what you can find.
Yeah, no, absolutely. And I guess kind of if I'll tack onto the question here, when you're looking at deals, and at least from what I've seen, and obviously not in the same space as you, right? Everything in real estate is expensive these days, and you got to find the right deal. But are you akin to paying for expansion? In other words, rent, physical occupancies above 85%, and economic occupancies above 85%. So not much you can do on day one. They've already got gates. They've got the software in place, but there's land to expand, and obviously they will premium for that. But obviously there's capital involved.
What you'll find. So I'll tell you the ideal storage facility that I would love to buy right now if I were you. You find one that's full like that at 85, 95, even 98% full, but you find people who are not charging what they should be in rent, the people who want to be full, the people who would rather be full than charge the correct amount of rent. You can literally find facilities to buy where the mom and pop owner is charging $52 for a 10x10 when they should be charging $72 for a 10x10. You do some basic math there, that's 30% that you can add to revenue. 30% on the revenue side is, 60% on the net operating income side. So there's huge, if you can find a operator that is full and under market rents, it's priced in, right? They're going to want some extra they're going to want some extra cash as part of the purchase price if that's going on. But I think those are perfect opportunities. That's what I'm looking for right now, because that's where I can find 15% plus cash on cash yield in today's market. That is absolutely, you're right. It's frothy.
Okay. No, that's helpful. I appreciate all you're doing on Twitter and taking the time out here today. Thanks
for hopping on, Greg. Appreciate it.